Welcome to Save US Taxes Legally. We're going to start off with three simple questions. Excuse me. Number one, do you want to leave a legacy for future generations? Yes or no? Number two, do you want all lawsuits to become frivolous? Yes or no? Number three, do you want to save taxes year after year, generation after generations? Yes or no? You answered yes to all three questions. You're in the right location. Please stay with me for the next 25 minutes. Imagine you saving 4, 5, 6 figures in taxes every single year. You can use this money, put it back into your business, to pay off your mortgage, to buy a new car, a new vehicle, to take your family on a well-deserved vacation, to give to your favorite charity, or to save for retirement. Imagine nobody knows what you own, where you own it, how much you own it, what you do with it, and how much you sell it for. Imagine all lawsuits become frivolous and just go away. Can't stop you from being sued, but you just give the first page of your trust and they just disappear automatically. How much time, anxiety, worry just disappear with that. Now, I believe every US business owner, entrepreneur, franchisee owner, 1099 income earner, and US investor needs to know this information. It's not taught in schools. I believe it's my duty and my honor, since I learned the secret of the rich, to share it with as many people as possible. I'm saving thousands of dollars. I want other people to save thousands of dollars. I also believe that the playing field must be leveled for all businesses. The Amazons of the world get free land on Staten Island. My brother's brewery closed because the rents went too high. I want this to be as fair as possible. Now, so we got that out of the way. Let me share my screen right now. Come on, work. This is Save US Taxes Legally. My website is www.thetrustisyou.com. I also have a free class on the Great Discovery at www.sallygimmon.com. There you're going to get a presentation similar to this. 3 articles from Forbes magazine I did not write. 2 pages of case law so you can research this to your heart's content. And examples of clients saving thousands of dollars. Now, most people have never heard of the, go down, come on. Most people are unaware of the 7 different tax brackets in the United States. The more money you make, the more money you pay. It goes from 10% to 37%. There's 4 ways to file your taxes. Most expensive way is single. Unfortunately, I'm single. Again, the more money you make, the more money you pay. Next, next level is head of household. If you have children who are 18 or under, then it's married filing separately, and the cheapest way to file is married filing jointly. Now, I want you to pay attention to this. This is January 1st, 2025. The big change they made was in married filing separately. If you look at this, it's the same amount as single, all the way up to 35% tax bracket. It becomes a little bit cheaper at 37% tax bracket. If you are married, if you get nothing else from this presentation, please file jointly. You'll save more money in taxes. My personal story, so you have it. I became a real estate investor back in 2018 when my mom got sick. She went to a wedding in North Carolina. They were from Goodyear, Arizona. I was living in Phoenix. She went to my nephew's wedding in Charlotte. She got septic of the blood or blood poisoning. Got into her pacemaker. They had to do open heart surgery, take out her old pacemaker, put in a new pacemaker. She was on the ventilator for 13 months, in a hospital for 15 months. Thank God she got better, but she came home. 2019, I joined my real estate group in 2018. 2019, with my mentor, Jay Tannenbaum, I wholesaled 7 bank-owned properties nationwide. Woohoo! Sally was a rock star in her real estate group. I paid off $184,000 in debt and was completely debt-free. And I had $50,000 sitting in my bank account. I'll tell you the rest of the story in a few minutes. I'll tell you the rest of the story now. COVID happened. Everything we were doing was bank-owned properties, so the bank shut down. On April 1st, COVID happened about St. Patrick's Day, March 17th. On April 1st of 2020, 3 of my properties did not pay me. One property did pay me. I was making about $750 a month. I could live on that. All of a sudden, on April 4th, my CPA calls me to tell me my tax bracket went from 22%, right here, to 24%, and I owed the federal government $94,000 in short-term capital gains. I only had $50,000 saved. My mom's Irish. My great aunt Kitty in Ireland always said sleep on it. I went to sleep. I woke up 5 o'clock the next morning. I had read an article on the Rockefellers Spendthrift Trust. It's called The Office. I researched that for 5 months, and I started both my business and my beneficial trust September of 2020. Now I want to teach this to as many people as possible. Whoops, I hit the wrong button. Blast it. Sorry about that. Let's go down this way. Now, I work for a private law firm. Come on, go down. Now, I want you to research this as much as you can. IRS tax code is 643B. It's been in front of the United States Supreme Court on 2 separate occasions, and I work for a private law firm that was started by Paul Benson, a Harvard law professor, 77 years ago. In 77 years, not a single trust has ever been audited. Now his grandson and great-grandson run the law firm. They are so confident in what they do, they will give you, they will give you a certification saying if you get questioned by the IRS, they will defend you free of charge. In 77 years, it's happened once. A senior IRS agent went down to Houston, Texas, where the law firm is, spent 5 hours in the boardroom, read through it, he approved it, and then 2 weeks later, he sent an unsolicited letter that if you want a copy of that, just reach out to me because I'll give that to you. But if you Google, and please do, IRS tax code 643B, you will find an IRS opinion letter dated September 11th, 2018. They do not like the irrevocable, complex, discretionary, non-grantor spendthrift trust. They do not like tax code 643B. Well, it's their opinion. I personally do not like lima beans. Maybe you love lima beans, but never, ever give me lima beans, please. This is their opinion, and there's 5 memorandums that have come from this opinion letter. The IRS cannot change the tax code. Only Congress can. Too many US presidents, including our current one now, too many senators, too many Congress people know the secret of the rich and have the trust. Too many of their donors know the secret of the rich and have the trust. The only thing Congress is going to do is keep putting taxes on the middle class. So let's go through these 5 elements. Irrevocable. This goes from generation to generation to generation. I had the book, I had read the article about what the Rockefellers do. The Rockefellers Trust is called The Office. It's 7 generations old and has almost 400 people under the same EIN or employee identification number. Each family files a separate 1041 tax return. Their money's not commingled. People ask, is it hard to get things in and out of the trust? I've wholesaled 28 properties since starting the trust. Nope, it's not hard. Complex. This trust can holds money from day to day, week to week, month to month, year to year, decade to decade, century to century. 97% of the trusts sold in the United States are what my mom and dad had and what Susie Orman talks about on PBS television, the family trust or the living trust. There's nothing wrong with the family trust. It's designed to avoid probate and then it dissolves. This is not your mom and dad's trust. This is what the Kennedys, the Trumps, the Rockefellers, the DuPonts, the Carnegies all have. It comes from England way back when King Henry VIII, that famous king who chopped off his wives' heads, hey, marry a few ladies, murder them, he started the Church of England. He went to go tax the lords and ladies of England, and they went back to the 13th century to the Magna Carta and said, oh, no, King Henry VIII, you can't do this. It's contract law that came to the colonies while we were still part of England. The law firm I work on behalf of inherited a trust that turned 350 years old in 2023, before we were a country. Our current tax code went into effect February of 1913. It was only supposed to be around for a few years. So the super rich families of that time, the Rockefellers, the DuPonts, the Carnegies, the Kennedys, made sure they could save taxes. But guess what? If they can save taxes, we can save taxes. Unfortunately, the tax code has only grown and grown and grown in the past 113 years. So irrevocable, complex, discretionary. Whoever is the trustee or trustees can make the rules for the beneficiaries. This cannot be contested in court. It can be while they're alive and also from the grave. True story, I have a client, husband and wife, who have 4 apartment buildings in Los Angeles. Their adult daughter lives in one of the apartment buildings, and they're requiring her to do 4 random drug tests per month. She has a slight problem. She took her parents to a federal court. The judge read through the trust, and he said to her, you have 2 options. Option A, pass the drug test, stay rent-free. Option B, move out, continue using drugs, and pay your own rent. I do not want to be invited to their Thanksgiving dinner. So that's discretionary. Non-Grantor. This makes the trust completely private. My mom and dad had the Given Family Trust, the living trust, and when both of them passed away, that trust dissolved and all the assets had to be divided up equally. When you start the Spendthrift Trust, you're going to have someone who will never be a beneficiary, who will never be a trustee, sign up to be the grantor or the settler. It's not a speed bump. You will need their social security number. They will sign up to be the grantor and then sign themselves away from being the grantor. I've done this for many of my clients. It's very easy to do. I made a mistake. I used a family friend. Jim was 78 years old, had arthritis in his hands. He had to sign his name so many times that you choose more, but choose better than that. The 5th element, spendthrift. This has been in front of the United States Supreme Court on 2 separate occasions and won both times. You cannot get more legal than this. Now, Paul Benson wrote 5 specific trusts to save specific taxes. We only talk about 2 of them here. I'll mention the other 3 in a few minutes. The business trust is for all U.S. business owners, U.S. franchisee owners, entrepreneurs, franchisee owners. You will save at least 90% on your federal income taxes and no longer pay state income taxes in 43 states. I cannot help or work with W-2 income earners. Before you get your paycheck, the FICA and state income taxes are taken out. So this is an example. He called me on January 3rd. He's a salesman in Virginia, gets paid 1099 income. In 2024, he made $150,000, and he wanted to know how much he could save. We used 2025 numbers. Single, ladies, he's single. So at 90%, he would save $25,962, plus at 5.75% Virginia state income taxes is an additional $8,625. So for the full year of 2025, if he makes $150,000, he will save $34,587. If he makes more than $150,000, he'll save even more taxes. If he makes less than that, he'll still save taxes. Again, this goes, he has access to the money with a debit card, and this is his money. Ladies, he's single. He lives in an apartment with 2 roommates and drives a 10-year-old car. Maybe you don't want to meet him. This is my first property. Again, I started the trust in September of 2000. I bought this bank-owned reverse mortgage in July of 2000 because my mom was in North Carolina. I knew because of my tax bracket, between $20,000 to $50,000, that $30,000 spread in between at 24% would be $7,110. I had to wait until August 28th, 2021, started at $50,000 bid, and it finally ended at $64,326. Without lifting a hammer, Sally made $44,326. Great investment. Even more importantly, at 24% tax bracket, I got to save $10,368.24. What I did with that $10,368.24, I put into more real estate and have never looked back. And I'm not crowing, I'm just trying to tell you why I do this, why I want to teach people. Now, the beneficial trust is going to save you in 5 very specific taxes. This is just an example of the tax brackets, the 7 different tax brackets on the same $50,000, how much you will save. Before I started the trust, I would have to pay $11,000. After starting at 24%, when I went to 24%, it would be $12,000. Short-term capital gains are a year or less and affect you when you sell crypto, you're a Forex investor, you're fix and flipping, you're wholesaling, You're doing auction houses or tax liens. Interest income taxes, same amount, 10% to 37%. Or when you're a passive investor, you're in mutual funds, you're in a REIT, you're doing subject to real estate, you're doing the BRRRR strategy. I have notes where I'm the paper in the house. People pay me. My three properties that didn't pay me, they were notes. If you're doing creative financing, seller financing, or Forex investors. Forex investors, you get taxed twice. Capital gains and interest income taxes, you need the trust. Next one, dividend income taxes. If you're in the stock market, you're a day trader, you're an options trader, you're a futures trader, you're doing commodities, you're living off of dividends. Again, depending on your tax bracket, it's between 10% to 37%. Rental income taxes. If you have short-term rentals like Airbnb, vacation rentals, 3 doors, 5 doors, 10 doors, 20 doors. Maybe you're into multifamily, apartment buildings, commercial property. Are you doing Airbnb arbitrage? Yes, you can move a property with depreciation schedule into the trust. Yes, you can move a property on a cost averaging into the trust. Remember, it's going to save you any lawsuits. So if the renter's dog gets out and bites the mailman can only go after the renter. They will not come after the owner. And then one tax that's not on here, royalties. So if you have talent, maybe you're an actor, an actress, a musician, an author, an artist, you're in the NFT world, you have copyrights, patents, or intellectual property. They're taxed a little bit less, between 10% to 35%, but you'll save those taxes too. This next slide is for long-term capital gains. They're a year or more and are either 15% or 20% and affect you when you sell your business, sell an investment property, or sell a baseball card. This is a true story. The son saw my TikTok video. We got his dad, Jim, on the phone. He was working with a business broker, Sam, that was going to be sold on April 30th, 2023. Sam had to change the contract. Sam and I were talking. Sam's like, I'm going to make $30,000 off this deal. I get paid 1099 income. He started the trust. Told him about my affiliate program. So Sam tells Michael, who's buying the restaurant in Kentucky, it's going to be his 7th restaurant in 3 different states. And Michael's like, I'm going to save thousands of dollars. So Michael bought the trust. Sam made $1,000. But his wife, Marianne, knew about the trust, but didn't know until March 30th how much money they're going to be saving. She calls me on the phone, crying happy tears, going, if we have cancer or a heart attack, we're going to have at least an extra $450,000. It's an amazing thing. Now, if you want to reach out and set up a 30-minute tax breakthrough session with me, it's www.thetrustisyou.com scheduling. My free class on the Great Discovery is you just go to my first name and my last name squished together. It'll redirect you to the Great Discovery. Sign up as a learner. It's free. Don't pay for anything. There you're going to get a presentation, 3 articles from Forbes magazine, 2 pages of case law and examples of clients saving thousands of dollars. I told you I was going to tell you about the other 3 trusts that I can also sell. There's a senior trust for anyone who's over 65. It can affect your Part B of Medicare. Medicare Part B is your doctors and your tests. If you make too much money, they can raise Medicare up to $895 per month, depending on how much money extra you're making. Another trust is the charitable trust. If you're a 501c3 company, I have 3 clients who are saving so much in income taxes, they start their own charities. So they started a charitable trust. And then the last trust is if mineral rights. I've only sold one. One of my beneficial trust people inherited his granddad's horse farm in Oklahoma with 6 oil wells on it. My goal is to teach this to as many people as possible. It's legal. It's in the IRS Tax Code 643B. It's been in front of the United States Supreme Court 2 separate occasions and passed both times. Our current president's dad started this trust in 1972. Please set up a 30-minute tax breakthrough session with me if I can help you save money, and I appreciate you watching my video. I hope you all have a beautiful week and take care. Bye-bye.